All right, everybody. So this call, we will be going over how to trade GBPJPY, and it's going to be going over how to make money on it without having, a headache, or without having to question yourself of what's to do next. So the first thing, of course, obviously, when we're trading, let's reset this chart. When we're trading any pair, we need to look fundamentally, right? So you would come over to whatever news site you use, of course, to get your economic calendar for Forex. And you would go to the week, let's say it's Sunday, like today. And all right, there we go. All my filters for all the pairs that I need is on perfect. Alrighty, so you'd make sure, well, if you never adjusted your filters, you don't have to worry about that, you're good. And you would come look at the news, and you look for JPY, and you look for GBP news, and you would determine for the days you would be trading, how is that news going to affect the market. So today is Sunday. So you would take a look, and if you have a trading journal, you would make note. So Sunday 2030, which is 13, 14, 15, 16, 17, 18, 19, 20. That is 6, 7, 8, 8, 30. We're going to be having two news for JPY. Now, only one of them is really important because it is medium impact. And you would take a look at this, and you would see all right, cool. And you would see basically how the news would be affected. I'm not going to go in detail because this video will be on YouTube. Of course, you all know from the other calls how we normally be able to determine how it would be bearish or bullish based off of other stuff. So you would determine how JPY will be affected, right? And that's what you do for the news, right? Now, because it is, what time is it? All right, market is open, but we won't be taking a trade right now. So we will be looking at past data, but let's just mark up a chart so we could go over this, right? So the first thing you want to do is, let's do it basic so everyone could catch on to this. You would add your support for the month. Sorry, I have this adjusted for the way I trade. Let me just put that there like that. And you can color code it if that's what you do. If you don't color code, you just use one color. That is completely up to you. Then you would mark this down here, bring this down to this level where we have our monthly support now, and we go towards our weekly. On our weekly time frame, what we're now going to do is the exact same thing. Find our support for the week. You could label it if you want to label it. I know a lot of people label their chart, and that is completely cool. Put this up here. Alrighty. Now, oops, we don't want that. Now, the next thing you want to do is find your support for the week, which would be right here. Perfect. And we're going to create our trend line. And we create our trend line by drawing our line, just connecting the wicks. We have this right here. I color code my stuff. Here we go. Perfect. And what you can do is create a channel if you want by cloning it. You come here. Just need 2 wicks to touch, family. That's all you need. That's close enough for me. Perfect. Now that we have that, what we're going to do is head over to our daily time frame. Our daily time frame, we're going to do the exact same thing. So right here, we have our daily support. Then up here, daily resistance. And what you can do again is draw a trend line on your daily time frame. I'm going to be going over some different lines we're putting on our chart, which obviously most of you already know about for the sake of this video. Let's add this here. And based on our trend line, we can be expecting price to now reverse to continue down. And of course, you know what happens if it breaks through this, but we'll be getting into that throughout this call. So like I said, when it comes to creating a channel, you could just clone it. Perfect. See if you could get 2x to touch. That's all you need. Family, create that trend. I know some people do body to body. It's completely up to you what you use. All right, perfect. We have this here. Awesome. Now, what we're going to do is head over to our 4-hour time frame, and we're going to do the exact same thing. So we'll come over here, just mark this level off. Perfect. Now, the reason why we mark off all of these so we can know how strong these support and these resistance areas are on a monthly, if we see price breaks through all of these and breaks through our weekly trend line, we can expect price to come to this level. If price is at our 4-hour resistance, this can be a sign for a possible reversal. Same thing here, same thing here, same thing here. These will be in confluences with everything else you're learning. Now, the next major thing what you want to do is add quarter points onto your chart. Quarter points are every, for GJ, 25 pips. And we're going to start from down here, from this wick, all the way up here. And down here, price is at 148 for, we can put it at 500. So let's make our quarter points black. We're going to make it thicker. Come here, and we're just going to change by going to the coordinates, change this to 500. Perfect. And just so we don't have to keep pressing that, let's lock it by staying in drawing mode. And this all you'll be doing until you get up to 155. We could do 155, 500. So very simple. Now you just make this 750. So everyone that is on this call, while I'm doing this, you can actually add these onto your own chart, because you will see how price is like a magnet at these points. Of course, most of you already know this. So it's 000, 250, 500, and 750. Remember, like how you'd remember 911. And of course, if any of you have never saw this method, you would now see already, even though we haven't filled this up yet, price is just being magnetically attracted to these quarter point levels. Let's just put this here. Just gonna fill this up for the sake of this video. Worry family, we are almost there. But this is why it's very important as well for you to do this on a Sunday, so you don't have to do it throughout the week. You just want to already have these on your chart. Now, the more you do this, the more you will become familiar with the numbers. Sometimes what I do is, as you seen at the beginning of this, I had my stuff as dots. So let's say like prices in this area right now, I may just do it for about 200 pips, which may be, so this is 152, it may be up to 154. So I would just do it for like about 200 pips sometimes, because I don't like to keep my chart so jam up, because let's say decide to scalp, I will mark up my chart more. But you want to do this until you get familiar with easily identifying these areas. All right, so that's 750. Sorry, someone said that Duddy. I'm just asking who this is. Stop letting random people in. Alrighty, cool. Start that person in. All right, so we have 154 in already. Let's now add 154 to 50. Awesome. 154 500. Awesome. Then we would add 750. We are almost there, family. Why it's so important to take time out just to get these done. Just put 250 on for this one. All right, perfect. Now, after we have done all of that, right, you want to make sure you take stay in drawing mode off. Make sure you take this off, because back in what year is this, 2021? 2020, I think for a whole month, I kept reporting my problem to TradingView, letting them know they had a problem or error or whatever. And they keep telling me about drawing mode, drawing mode. I keep letting them know I wasn't drawing. And all, like, maybe because I had to make a new trade. Well, I didn't have to, but I made a new trading account because I thought something was wrong with that. And then I figured out this was the button, because I never used it. So it wasn't on my mind to just automatically turn it off. So every tool I basically had, I had to like keep deleting because it's doing that. So it's just to remind you all, it may not happen to you. I'm very slow. So in case that problem happens, you know, just to prevent it, you want to turn that off. Always remember to turn that off, because, you know, we're focusing on so many other different things. That small little thing may slip our mind. So now that we have our QPs on, I want everyone to have already written down these basic steps that we went over in the beginning. Remember, the first one was checking the news. Very important. You check the news. The next thing is you want to identify which direction the market is going in. You mark off your support and resistance. You draw your channels or trend lines if there is any. Then you apply your quarter points. Now, what we're going to do, let me just bring this down. Wait, I could get rid of this. There we go. Now, what you want to do, what I do sometimes, if I don't forget, is I always save, because what happens is if you don't save and you close this out, it will not be there. Okay. So now that we have that there, we're going to focus on what is happening right now. So we take this, well, let's go to the past, because we can't get it to move. What we're going to do right now is we are going to take our rectangle box, which you can find. Sorry, so used to having all my stuff saved right here. And let's say we're trying to catch this downtrend right here. And let's say the move has already happened from here and you're trying to catch this whole swing, right? And right now it is, let's say here, all the way down here, and you see price coming up and you're not sure what is happening. So what we're going to do is, while price is coming up and you don't want to get faked out, because remember, in each one of these boxes, 25 pips. So 25, 50, 75, 100, 150, 175, 200. In your mind, all right, trend has changed. GJ is going up. I think it's time for GJ to go up. So what you're going to do, most persons, they buy. And for sure, they may have caught about 25 pips, and 25 pips may have been a goal for the day. But let's say someone tried to swing it now because they saw it came down here. It created a higher low. You know, most of those people who just goes off for lower lows and lower highs, higher lows, which the market is way more than just that. They would swing it from here and try to ride it up and get hit stop loss and be like, what's the problem? It's because this right here, they weren't following what was going on. So what we're going to do to prevent that, let's say it's in this moment right here, because I probably can block this off. Let's see something. So we don't see that data. Better not even going to go through all that. Let's do it from here. We're going to put this right here. This would be our, sorry, let link in right here. Mark this off. Boom. Now what we're looking for is where there was an obvious sign of a resistance in this area being broken, which was right here. So we put this here. Perfect. Now, as we can see right here, price stayed in this area for a minute. And what do we have right here? Anyone can say it?
Head and shoulder pattern.
Right. And what kind of head and shoulder pattern is this?
Which is it?
An inverted.
Inverted.
And right, meaning, you see it now? Inverted meaning upside down?
Yeah, I get you.
Awesome. So that is another clear sign when we see price, trying to switch this back. When we see price at this level, that price may be continuing down. So what we're going to do is we're going to enter off of where our quarter point is, which is right here. And it's at the perfect neckline for that inverted head and shoulder, right? And what you can do is you would now ride this. Let me use a tool that everyone mostly uses. The short, all right, short right here. You would ride this to the previous support, right? Which would be right here. That is 156 pips. But let's say you want to be accurate following the quarter point rule. 150 pips. And what you can do is you like a 50 pip or 25 pip stop loss, because you still want it to be a 1-to-3 or 1-to-4 risk reward ratio. A 50 pip stop loss, that is very, very high. But I know some people that do this, and I don't recommend it, but if you do, just make sure reward is the same amount, 1-to-3. So we're going to take a 25 pip stop loss from this, right? Now, what happens when, what happens when price come here? It tanks. So remember, in each one of these boxes, 25 pips. So we have here 25 pips secured, 50 pips secured, 75 pips secured. Now, you could close it, or you could just let your trade do its thing. If your initial move is to hold it down here, what happens? It comes back up to entry, which gives you another position. And what happens? It tanks. Look at the candle. That's crazy. 150 pip move. Now, let's go over a different one where a person's going to probably get in. And what I'm looking at right now is just identifying areas where persons would normally be confused on how to catch these moves. All right. So let's go to the past. We can look at the next one where we probably can draw our Fibonacci. All right. So right here is a perfect example of using our Fibonacci. Let's go down to the 50-minute time frame for this one. All right, let's just do something in this area then, because what's going on? Okay, perfect. So we see from our initial move down here, price came up, formed what we call right here a resistance, and we can see where it came on this level again. We would now, because you need it to be one push, all right? Drag it from here, put it all the way up here. Damn, what was that? Probably something in Zoom. Someone said something in the chat. Let me just double check, my bad. You're funny, bro, Gil. You are funny, bro. All right. So my bad. This was a horrible example. I just realized I'm on a 50-minute time frame. You don't want to draw your Fibonacci like that on a 50-minute time frame. When you're drawing your Fibonacci in a 50-minute time frame, you need it to be like a serious pusher, right? This wouldn't qualify because you had this hammer right here, and that would not qualify, family. My bad. But this move right here would qualify. You could see this push. This is, dang, this is a 75 pip push, and you could tell because remember I said each one of these boxes are worth 25 pips, and that helps you with easily setting a stop loss and take profit with GJ. So if you know 250, and I suck at math, so I could tell you this. If you know 250 is where your entry is, you can aim for 155 because that's a 75 pip move. 25, 50, a little up. Yeah, 25, 50, 75 pips. I know most people think I'm stupid, so we could use a tool and just drag it. 75 pips, exactly. And this is how you could easily do a 1-to-3 risk-reward ratio with GJ. 25 pips stop loss, or if you want to be safe, I know most people do 15 pips or 20 pips. To put a 15 pip, but you do have these wicks that come out of nowhere sometimes, a wick down. You see them all the time on GJ. And that's why you want to do the quarter points, because you will not get wicked out most times. If it hits a stop loss here, either news is taking place right now, and that is what we have being prophecy. You know, when the algos take place, etc., blah blah blah. That what you would see where the news would be wicking people out like crazy, just going like this. But this is not that case, right? So you see the market had one huge push, 75 pips. It formed a resistance. Now what you want to do is be patient, right? And by being patient, I mean, when you draw your fibs, this isn't the only thing we use. This is just a tool to help you, all right? So you take out your fibs from where there was the last wick of that push. You come right here. We drag this up here, all right? Now watch what happens when we drag this up here. So where it formed, where that initial push started to die down, look what happens. It comes inside this golden zone. And it shoots to TP1. So 0% would be our TP1. Then we have TP2, TP3. And that is 41 pips. Then of course the stop loss would be just right under our 0.764, or it could be on it, 22 pips, or if you put it right here, 20 pips. But 41 pips on a 50-minute time frame, that is a beautiful scalp, right? Now, what you want to take into consideration as well is you want to make sure you're trading inside that time zone, because what you can have, or we can obviously see right here, is consolidation, which people might say, oh, the market is faking them or blah, blah, blah. No, it's just really collecting orders right now. We can see it right here, what it's obviously doing, but you can see it is staying on this level. Look how much times it tested it, twice. And look what happened. It pushed up for about 41 pips. And then this is when the market finally decided to take that dip. So that's just an example of how to draw your fibs on the sort of this 50-minute time frame. Now let's take a look at drawing it for a stronger level, right? So using it for, let's come over here. Using it for this, let's say we use it for this, right? We could draw it from where it had that initial push coming all the way down. Put it here. Started to push up from here. All right, perfect. So now what's happening, come over here. It broke past our golden zone on the 4-hour, and it is close to hitting the 7.64. And honestly, if it hits this level, it wouldn't have hit the stop loss if someone was setting it off this, which I do not recommend because that is a lot of pips. That is insanity if someone does that. But it did not break our 0.764, which can tell us still that price may react when it hits this zone, because here we have a clear downtrend of what price is paying attention to. Then, of course, if you're looking at imbalances, right? Let's say if you're someone that is looking at the imbalances, you have right here where, what's going on with my mouse? Right here, where you can obviously see it is inside that zone. Now, let's take a look at a move in the past, because price isn't moving here, and where we could obviously see where price played out on the forward time frame. So let's take a look at right here, right? You can see where price had initial push moving up, and sorry, our Fibonacci from the relative low to the relative high, and right on this wick. Sorry, my mouse is freezing right up. All right, awesome. So let me just darken this so everyone can see it. All right, there we go. Everyone should be able to see this perfectly now. So we can see we draw it from where it had that initial push when it did that pull, came all the way up here, and look where it came back down on our golden zone. And this is where being patient comes in. And sometimes what you can do is sell to this level, right? So we see right here, it came on this level twice, came up for about 25, 50, 75. Then it came up a bit more, tanked, right? Came back here and moved up. And this is how you use your fibs. And if you want, you could go, let me just circle it so I don't lose this. All right, here we go. Perfecto. So once you have marked that off, right, what you could do here, delete this. Man, this thing is trying to cheat me. Let's come over here. Perfect. So we see where price obviously tested this level, right? Dang, why is this playing me like this? All right, price obviously tested this level.
Hey, huh?
Let me just mute everyone, stop persons from muting themselves. All right, here we go. Perfect. So we see where price came down here. Look at this huge drop, right? It tested this level. And what you could have done, let's say you were confused about what was going on, right? We see, sorry. We see right here where it came back and tested this level. And remember, right at this time, none of this data is here. None of this is here. It came down and it started to come back up, right? You could have had your 15-minute OB marked off. And once it broke this, you could have used this as an entry or wait until it come here and just put it 25 pips. Once it smacked that, you could have moved your stop loss for about 20 pips, move that in profit, and it still continued up. And all you have to do is just keep moving it in profit below the lower highs when it formed. Form the next one, you put a stop loss under that wick, move that up. Form the next one, move that up. You're just riding that up. What would have happened, of course, when it came down here, you obviously would have got taken out, but we could see, it seems that this was a time when it wasn't in GJ session, because we could obviously see where it just was collecting orders in this area. But Very simple when it comes to doing that. Zoom back out. There we go. So, and it would apply for the same thing right here. So we obviously see where it was a downtrend coming down, right? Let's take our wicks, our Fibonacci. We put it to where the initial move up came, and look what happened. It touched our golden zone and tanked. What happened again? Touched it again and tanked over and over. It did this multiple times for persons to catch that entry. And I guarantee you, persons were still trying to buy. So what happens now when that move is gone? You just started trading brand new and you see it is in that and you want to decide, all right, what am I going to do? What you would now do, because you missed these entries from up here, you just draw it from where you see this wick is now. Draw it from this initial move down, draw it down to this wick. And what do we have right here? Entered the golden zone once more and did the tank. Like I said, TP1, TP2, TP3. Or you can just keep writing it down with the quarter points. So let's say you decided to enter once it drops to the 50% instead of entering just because it's in the zone. You decide to enter there. Here we have an 80 pip move, 127 pip move, 185 pip move. Unless you just wanted to keep moving your stop loss at the quarter points. All these you would have been catching, and we can obviously see. Let's just take a moment so everyone can see it. That price is reacting off of these quarter point levels. Very important. You can obviously see it, right? And the way we use it is based off of following the trend, the news, some other tips I'll drop inside the group chat because we're uploading this to YouTube, the one I'll let to be there. But once you see us following that and it heads in that way, it is going to continue to drop. Even if it wicks into another zone, you have to trust your analysis, right? And we can see right here where it still dropped. Still dropped. So it's very important to understand. Let's just take a look at an uptrend move. For example, if it wicks down, and you may get confused. Okay, cool. Here we go right here. So we see for this example, price wick down about 50 pips. So we have 25, 50, and about maybe 51 or 55 maybe. And it continued up. So you just have to be pretty sure on what's going on. And this is where you could go down to like the 15-minute or 1 hour. And oh man, I just lost that, didn't I? Okay, let me just circle that so I don't lose that. Let's get to this point. Let's just delete this too. We don't need this on our chart. All right, perfect. We're right here. Oh my gosh. All right, here we go. So you would go down to your 50-minute time frame. Remember, all of this data would not be here. So we go down to our 50-minute time frame and we'll take a look at what's going on. You gotta zoom in and you gotta zoom out, family. We can obviously see if we're going based off of chart patterns. Let me let Gil back in. If we're going based off of chart patterns, this right here is a bullish flag. We have it right here. And what it did, of course, is going to react. Remember, these are magnets for it to the quarter point level, and it continued up, forming another entry. You could have taken your fibs out. Remember, from the relative low right here to the relative high, taking your fibs out, and it's got in on that golden zone. Look at that, from the golden zone, and then continued up. golly. So consolidated, of course, in this because it isn't its time. So you can see obviously we're consolidated in this area, was just collecting orders. And of course, obviously this had to have been around 3 o'clock. And look what happened. It's like me when money go in my wallet. It turned on. So here we go. Give you guys one more example. So now, avoiding getting faked out. You want to take a look and understand after London session is over. You don't really want to be entering because what you're going to see is the market collecting orders. And you know what will happen? Like I mentioned to you all on the market structure 2.0, the market does. Where is this path tool? All right, here we go. Let me just lock this on. The market does where we have the distribution, comes down. It could either do accumulation where it's collecting orders, then do its pullback and continue up, or what it can do is do its distribution, come down, do this pullback. Of course, if it breaks this right here, that would be a break of structure on whatever time frame you're looking at. So we're just going to put it at this level right now. Then it collects its orders, and what it can do is fake you out, touch this QP. You're going to think, all right, price is selling, you sell, boom, comes back up and finishes distribution. So it can do this at any one of these points, family. We could have where at, take that off, this point, price comes up and then does this retracement. That's why you need to be careful when inside these zones of avoiding these fake outs, right? Especially if it's not its time. Because we could obviously see right here, came down, wicked down on our 4-hour time frame, and this is a huge wick, right? But we can see on the 15-minute time frame what the hell is going on. And let's just say someone who is going based off of head and shoulders. This is a sort of a lopsided head and shoulder, but you should be able to see it. You have the shoulders and we have the head, right? Look at that, right? Obviously, it is not complete. You know, not everything is textbook to the T. Let me just draw it so you all can see. We have right here where this was the first. Oh, I got to change this color. The first shoulder. We have the head down here, then the next shoulder. Why isn't it coming off? Change the color for this, black. And what you guys could have done if you wanted to is wait for it to reach, where is that long position? Wait for it to broken this head or the neckline, which would have been a pair, of course. Put your 20 pip stop loss, 15 pip, oh my gosh. We're gonna add that on. Your 20 pip, 15 pip, 10 pip, whatever you use, just don't get fake out. So you see entry would have been a pair. Bring this to about 20 pips or 25 pips, whatever one. It wouldn't hit. And look what happened, right? It then still consolidated for a bit, but you were in a good place. You came up a few pips. Most persons would have closed based off their psychology level, and you could have rode this up because it did not break out of the box again. You could obviously see this. Look at that. So we have, ooh, let's put this back. Here we go. We have the first 25 pips. Well, no, it would have been down here, but of course, following the QPs, you come up here, then you can ride that up. Once, of course, it's up here, you just put it on the lows, family. So that is the setup for that. Let me just stop this recording. That'll be it for YouTube.